Well, folks, yesterday I flipped everybody's flapjacks and I sold completely out of my Tesla stock once and for all. And so today's trading day was the first day where in the public count for the past 6+ years, it was the first day with no Tesla Tesla in there. It was a great day for the public count, by the way. At this time, this was about an hour or two before the market closed up, 69,000, but we ended up finishing up $81,000 today. So honestly, it couldn't have been a better day for the first day without good old Tesla Tesla in there. Now, with that being said, this created a lot of proceeds when I sold that stock. $197,000 in Tesla proceeds. So naturally, the question comes like, what did I go ahead and buy with that, right? And then additionally, in the Patreon portfolio, I had a position as well worth, much smaller amount, but relative to the portfolio, it's a very important amount, $2,500. So basically, we're talking around $200,000 of money to invest, right? So in this video here today, we're going to go through the stocks I bought and why I bought these particular stocks. One of these stocks is such easy money. I'm like, how are people not buying this stock right now? Like, it's literally like a free money ATM. Like, it's ridiculous. Like literally just give me free money and that's what this stock is right now, okay? We're gonna talk about another stock I bought with just ridiculous, insane upside that I'm like, like people are gonna look back in 2 or 3 years from now, probably even a year from now and be like, oh my gosh, like how was I not buying that stock? It was at what price? And just, it's gonna be fascinating, right? And so we're gonna go through the stocks I bought with that money. And by the way, some people are like, are you just gonna keep that money cash? Absolutely not. No way, Jose. And the reason being essentially is this money needs to be invested. Like, this is invested money, it needs to be invested. I already have cash on the side in case the market tanks more and we have some sort of epic crash and go down to new lower lows, which isn't a high probability, but if that happens, I got some money there for that, okay? So this money, for this Tesla money, it needs to be right back invested in the market, and so that's what I went ahead and did, and that's what I'll be covering in this video. I appreciate you guys joining me as always. Thanks so much for being here. One thing only I need from you guys, and it's for you to smash that like button on this video. That's it, man. That's all I need from you. I hope it's not too much to ask. I appreciate the 10% of the people that watch my videos that go ahead and do that. Thank you so much for that. And additionally, if you want to subscribe to the channel, you can certainly subscribe. And the Ferrari, we get the Ferrari back, baby, okay? It's back and it's working good. Once again, we had that issue where just the music would all shut off, the screens would shut off. It looks like they did a software update and it looks good now. So pin comment down there if you're looking to apply to join private stock group, private wealth group, get access to 1000xstocks.com, all that good stuff. We can send your Steel membership cards in the mail once you join us in there. That will be pinned comment down there. Click on that, fill out a form, we'll see if we get you access to that. Alrighty, folks, you ready? First off, I got to say this, okay? I had my first ever tweet, post, whatever you want to call it on X, go viral yesterday. It's the first one I've ever had that actually went like legit viral, right? 1 million+ views. And it was obviously the one where I sold Tesla stock. And so, I'm not that big on X. I probably have about 60,000 followers or so. So it's a much smaller community I have on X. And I really just started taking it serious really in this past year. Listen, man. Thank you guys for being so supportive on YouTube, because we have built such a great supportive community here on YouTube. Man, on X, it's very, very different, right? A lot of people, just insanely mad that I sold those Tesla shares, wishing I lose all my money and all these sorts of things, man. And so I just want to say thank you, everybody on YouTube here that joins me. That's so supportive. We have such a higher, I guess you can say, emotionally intelligent crowd here, and just overall intelligent crowd. X seems like, at least as of right now, and I'll build up the community, we'll get a healthier community on there over the coming years, but as of right now, it just seems like it's a lot of like high school, college kids, that think they know everything in the world, and they're just barely probably in the market for their first 2 months, and they're just throwing stuff out there. And so I appreciate you guys here on YouTube, because even my younger viewers, the ones that are in high school, college, that will watch the channel, which is a smaller demographic. Most people that watch my channel are 20s, 30s. A lot of you guys are in your 40s, 50s, and you're just at a much higher level, right? And even a lot of the younger viewers, the high school or college folks that watch the channel, you guys are at just so much of a higher level than some of these folks on X. I'm like, oh my gosh, and you could just see it. It's crazy, man. Alrighty, guys. So what did I go ahead and bought? Well, I went ahead and bought a brand new stock. Actually, 2 of these stocks are brand new stocks. One is called Adobe, ADBE. Brand new stock for me in the public account. I bought 222 shares, It was a $78,000 move. So far, we're up $1,700, but keep in mind that it's a brand new position, so it'll shake around here in the short term. And I've been flirting with buying Adobe I've been throwing that out there on the channel for at least the last few weeks now, right? The last few weeks, I brought up Adobe. I mentioned like Adobe's pretty attractively priced here. Like, I don't own it yet, but don't be surprised if I eventually buy it. And sure enough, went ahead and did it. Went ahead and bought Adobe. So when it comes to Adobe here, this is what, if you ever want to know, like, what does a great business look like? Adobe is one of the best examples I can give you in the entire world of what a truly great business model looks like. This next 45 seconds I'm about to take you through, very important. So you can always remember, like, this is what a great business looks like. Recurring revenue streams. That's what Adobe has. People are signed up on monthly, yearly plans, very consistent income coming in all the time for Adobe. That's phenomenal. Additionally, a great business model should be able to grow their earnings per share at a faster clip than they can grow their revenue. And that's exactly what we're expecting for Adobe moving forward, is them to grow their earnings per share at a much faster clip than their revenue. Additionally, a truly great business should be able to grow their revenue either high single digit or in the double digit range. And that's exactly what we have with Adobe. Additionally, a great business model should have very high gross margins. Adobe has one of the highest gross margins you'll ever see of any company ever. And additionally, a truly great business model should have very, very high net margins. We're talking approaching a 30% number or above. And that's exactly what Adobe. So if you ever want an example of what a great business model is and looks like, look at Adobe. But that's not even the best part. The best part of this whole thing is Adobe trades at a forward P well under 20. Now, for a phenomenal, great, top tier, like textbook, this is what a great company is, to be able to get that sort of company with these growth rates, with that recurring revenue streams business model that's so consistent, at a forward P under 20, like, it doesn't get better than that, man. And so that's why I look at a stock like Adobe and I'm like, I can't not buy this stock. Like, it's just too dang easy here. And a lot of times in the past, Adobe's forward P would be in the 30s, the 40s, sometimes even the 50s or above. And so that made it hard to kind of look at Adobe and be like, I want to go buy Adobe, right? Over the past few years. Now with a forward P under 20, put me in, coach. It's my time, okay? No, in regards to Adobe, look at the revenue chart for Adobe here on 1000xstocks.com, right? And this is what's projected to happen with Adobe's revenues. Like, it's just beautiful. I mean, it's just beautiful when you can count on a company year in, year out, quarter in, quarter out, just coming in, putting up great numbers. It's like the holy grail of a business model. You don't have to stress about, it's not like owning a home builder where you're like, oh man, if people stop buying new homes, like, I'm screwed. Their revenue is going to tank. The amount of homes they're going to be building tanks. The profitability, we could start losing money on the business model. This is not that with Adobe. Like, the only question is next quarter, does Adobe grow 7%, 8%, 9%, 10%, 11%, 12%? That's the only question. The only other question in regards to Adobe is not like, do they make money? It's just, how much money do they make? We know they pour in ridiculous profits and cash flows, but how much? How much? Like, that's the only question. And that's just so, you can just feel so comfortable holding a company like that, right? Additionally, look at how consistent those gross margins are, right around that 90% number. Insane. Absolutely insane, right? Now, additionally, this company throws off massive profits. What I'm showing you now is a trailing 12-month in regards to earnings per share, and this is what is expected to happen in the earnings per share. It is expected to skyrocket here, and that should be exactly what plays out here, okay? Now, in regards to the company, what's the point of making all these huge profits? Well, the company's going to then be able to do a few different things. One is they can do some massive share buybacks, which right now, Adobe should be buying back as many shares as they possibly can get their hands on. A forward P under 20 right now, with the growth rates Adobe has, buy back, and it's consistent of a business model they have. It's not like this is an ebb and flow business model where all of a sudden their revenue is going to tank 40%. That's not the way this works. And so they should be buying back as many shares as they possibly can. It's not like a home builder where a home builder, I'd say, hey, man, stack cash because you're going to go through a bad time. Adobe is never bad times. It's just how great are the times. Buy back as many shares as possible right now. Additionally, when you have these massive profits, you can build your cash pile. Now, cash pile is important for two reasons. One is for safety of the business model, right? Safety of the business model, so you can get through tough times if you ever go through it, which Adobe never really goes through tough times, but in case you do, you got a big cash pile there, right? But the other thing that I think gets overlooked right now in regards to cash is keep in mind, if you're a massive company, you can likely get 4% or so on your money still at this point in time, maybe even above 4%, which means you can make massive amounts of interest. Now, when you are talking about your company that has billions of dollars of cash around, now we're talking 4% can actually add up to a pretty big number, which helps ultimately build even a bigger pie and a bigger pie. So for a company like Adobe, like you could run the numbers on it. You know, if they produce an extra $6 billion and they were just to keep that on the balance sheet and get 4% on that, you know, big money we're talking here, folks, big money. The other thing you can do is you can buy out other companies. Now, Adobe tried an acquisition of Figma back, it was probably 2 or 3 years ago now at this point in time. It was not allowed to go through. The Biden administration, Linda Khan, those folks were not very business friendly when it came to acquisitions. Now, the Trump administration is supposed to be more business friendly when it comes to these acquisitions. We'll see. But the moral of the story is, I don't think it can get less business friendly from an acquisition perspective than kind of the Biden administration was. So if Adobe wants to make some buyouts over the next few years of some other companies, I think they'll have a much easier, at least realistic chance of making those acquisitions possible versus obviously they had no chance of some of these other deals, right? And Adobe, from what I remember in regards to that Figma deal, they ended up having to give $1 billion to Figma just because the deal didn't go through in that situation, right? No, the gentleman that's been leading the company since 2007, I call him Nara, okay, done a phenomenal job. You can look at, since he's taken over this company, look at the revenues, look at the net income, look at the stock price, look at the market, look at whatever you want, every metric, the amount of customers, he's done an amazing job. Amazing job. And he also, remember, changed his business model. This used to not be a recurring revenue business model. This used to be, you know, not a service-based business model. It used to be a product business model. People would buy one product. He completely fundamentally changed the business model, and obviously that's helped the company out immensely. Now it leads us to AI, right? Adobe Firefly, I was looking into, you know, some of the new stuff they have out as far as their photo editing, as far as their video content and whatnot. Oh my gosh, like it looks as high quality or more high quality than anything I've seen in the marketplace when it comes to creating any sort of photos using AI, videos using AI. It looks like the creme de la creme. And so at the end of the day, the worst case scenario for Adobe is AI is a net neutral, meaning it doesn't hurt their business model or doesn't help their business model. The best case scenario is AI is going to fundamentally help their business model in a massive way because people are going to want to sign up for products like Firefly in even a much greater extent. And with the advent of social media, the internet, the world's on the internet nowadays, marketing, photos, videos, more important than it's ever been by a mile, which means a company like Adobe is going to have, you know, much more pricing power, much more leverage as they continue to grow that company over time. So that's phenomenal. So when it comes to Adobe, buying the stock in the 300s or 400s is just an anti-stress ball, in my opinion. Like, it's so anti-stress. Like, there's a lot of companies you could buy in that are very stressful. Their CEOs are all over the place. They're chaotic. They're doing this, doing that, right? A lot of companies that their business models are up and down and all around, and it's just Adobe, especially in this $300 to $400 range where the valuation's at, it's just so anti-stress. It's just such an easy stock for me to buy and hold and buy more shares and buy more shares and just hold. And so that's phenomenal in regards to Adobe. I love this one. And don't be surprised if the shares I just bought in Adobe, don't be surprised if I add to that considerably over the next 3-6 months. Don't be surprised at all. That leads us to the second stock of these bunch of stocks that I bought, which is a pretty big buy, and that is Google McDougal. Yes, Google McDougal. I went ahead and did it. So added how many shares? It was around 444 shares of Google. A little less than a $70,000 move. I'm already up about $2,000 in the position, but now I'm up a lot more because the stock's up over 5% after hours. We'll see where it trades at tomorrow. So it's a pretty quick money maker in regards to good old Google McDougal here. Okay. Now, in regards to Google, their numbers just came out here in the last hour or two. Revenue beat easily. They beat by over $1 billion, what analysts were expecting. The earnings per share, if the revenue was a boom, the earnings per share was a bang. 281 EPS they did versus $2.01 was expected. They beat by a mile. By a mile. Google, McDougal. Talk about well executing, right? And this is what it looks like when you have a CEO that's focused full-time on a company. This is what it looks like, folks. Great numbers, not trash numbers, not the whole business is in decline. No. Great numbers. You come in and you smash analyst expectations and you beat even your own expectations, right? Look at the balance sheet of this company. Top 5 best balance sheet in the world. $95 billion in cash equivalents, and marketable securities for this company. Additionally, you look at long-term debt, only $10 billion. They could pay that off tomorrow and still have $85 billion chilling around, right? Total stockholder equity of Google McDougal is now up to $345 billion. Unbelievable. That's not even the best part. Look at the income statement. Oh my gosh. So they did $90.2 billion from $80.5 billion in the same quarter last year. Cost of revenues and research and development, they kept that in check very well. Sales and marketing, they actually brought that number down shockingly, which is insane to think because, with revenues going up nearly $10 billion, revenues were up on a constant currency basis from what I saw. It looked like around 14%. 14%? Come on, man. G&A, general administrative, right, was up for the company. But once again, it's a very small number compared to how much revenue was up. So if you look, income from operations went to $30.6 billion from $25.4 billion. Jeez, that's what I'm talking about. Other income, oh my gosh, a shocking $11 billion. Income before income taxes, $41 billion versus $28 billion. Look at net income. Net income came through at $34.5 billion versus $23.6 billion in the same quarter last year. Diluted EPS came in at 281 versus 189 was expected. Banger. That's what we call an A+ income statement right there, folks, okay? Now, when you want to break it down a little further here, look at Google Search and Other came in at $50.7 billion versus $46.1. YouTube came in at a little under $9 billion versus $8 billion in the same quarter last year. Google Network was the only thing that was down, and was down, we can call it about $150 million year over year. Now, if you look a little deeper here, Google advertising in general was up about a little over $5 billion year over year. Additionally, look at Google Cloud. $12.2 billion it did for Google Cloud versus $9.5 billion in the same quarter last year. So the cloud business is growing rapidly, but that's not even the best part of the cloud business. Look at operating income loss, okay? Specifically, look at Google Cloud. Google Cloud in this same quarter last year did $900 million of operating income. This latest quarter, it did almost $2.2 billion of operating income. That's way over 100% growth in operating income on a year-over-year basis. And the revenue is not even remotely close to 100% plus, which means there's huge leverage in Google Cloud now at this point in time. So basically, whatever is coming into Google Cloud for top-line growth moving forward, so much of that dollar amount is going to make its way straight down the bottom line. They have it now at scale. When a business is at scale, that means every new dollar that comes in, a lot of it is reaching that bottom line. So phenomenal. Additionally, they just upped the dividend for all shareholders. They're now going to pay 21 cents every 3 months for every one share you own, which is a 5% increase. And that dividend, they have so much room to move that up over the next 5-10 years. It's ridiculous. Additionally, stock repurchases. They're talking about they just approved a $70 billion stock purchase program, which is huge. And Google should be buying back as many shares as they can right now. Given where the business is at, all the different business lines they have, the profits pouring in for this company quarter in and quarter out. I mean, look at the total income from operations. It was $30.6 billion. Buy back as many shares as you possibly can right now if you're Google. Now, you guys know, if you watch my content for many years now, you know I preach what? GVD. Building out a great portfolio of growth stocks, value stocks, and dividend stocks. But every once in a while, you get to find a magical stock that is all three of those in one. It's not only a growth stock, but it's also a value and a dividend. It's rare you ever get to find that opportunity. But we have that with Google. Google has double-digit revenue growth, right? Latest quarter here was around 14%-ish on a constant currency basis. Forward P is under 20 for Google. It means it's a value stock, right? And we have a dividend coming in every quarter. It's the perfect stock. Oh my gosh. And so now you might say, okay, I know about Google search. That's great. I know they're trying to expand Gemini in the AI space, and that might be a big thing over the next 5-10 years. I know about YouTube. I know about Android. I know about Google Cloud. But is there something else really exciting about Google? Well, there is, and it doesn't get talked about too much yet. Waymo. From my understanding, Google owns around 70 to 80% roughly of Waymo. From what I understand, they've sold portions of it over time to raise money for Waymo, okay? But from my understanding, they still own around 70, 80% of whatever Waymo's worth. Now, it's also debated like how much is Waymo worth if it was a standalone company. I can tell you it's a very large number, And the reason being is Waymo, one, they're clearly the leader in the marketplace. Like you can go in many different major cities today and go get Waymo rides with no driver inside. So the things that Tesla's talking about doing, Volkswagen's talking about doing it, all these other companies want to do this over time, but that's like in the future. Waymo's doing it today. And even another stock I own, Amazon, right? They got the Zoox, which is here in Vegas. From what I always see, there's always a driver in front. Waymo has a fleet of vehicles today with no driver inside that you can take all over the city. I've done it. It took about 5 or 10 rides when I was in San Francisco a few months ago. No driver inside. Car just took me where I needed to go. That's happening today. Now, the thing you got to understand about Waymo is for Google, they don't necessarily have to make money per ride. I'm sure over time they'll make a profit for each ride they give, but that's not even the end all for Google in regards to this. You got to think bigger here. What is Google at the end of the day? The biggest advertising company in the world. That's how they make their money. So let's imagine, we're 5 years in the future, 10 years in the future. Google's got massive market share, across all major cities for Waymo. They're giving rides all over the place, right? An Uber-ish type market share. All right. What are they going to leverage then at that time? Advertising. They're going to be able to have in-car advertisements for everybody's rides. They're going to be able to send people notifications. Let's say somebody, got a ride on a Friday night to, this bar, right? Come Thursday night of the next week or Friday night, maybe they receive a notification, hey, first rounds on the house at such and such bar, a competing bar or something like that, right? Let's say they got a ride to, Texas Roadhouse, and another steakhouse says, hey, we want that customer. So they say, hey, come in on this night, get a steak, and we're going to give you a free appetizer, a free dessert or something like that. Try to steal that customer away from Texas Roadhouse. That's a place that things are going to go over time. And so that's what's important. And so Waymo, could they make money per ride over time? Sure. And that could be a successful business, but that's not even the end all. They are the biggest advertising company in the world. You've got to think bigger in regards to this because that's where the big money's at. Who cares if you make, $1 for giving Johnny a ride down there? Like, that's cool. But you know what's cooler? Also feeding all those advertisements, making all that money off that, knowing where everybody's going. They're going to this place, this place, this place. Be able to send them relevant offers. Then you can build more commerce around that. I mean, geez, like there's so many opportunities there. So many opportunities. And then you can tie it in with Android and Android Wallet. I mean, there's a lot. There's a lot that can happen there. And so understand Google's spending all this money. They're making this big investment because this is bigger than just like, we're going to make 50 cents a ride. No. This is way bigger than that. Other companies are going to be trying to just focus on like making a profit per ride. Google, they're going to be focused on other things. Okay, I can tell you that much. Now, this is a great chart by Joseph Carlson, posted this one. Waymo paid weekly driverless rides over time. And you can see it is going up rapidly. And you ain't seen nothing yet. Just wait to see this chart in 12 or 24 months from now as they expand into more and more cities and it starts to catch on more and more scale. Oh my gosh. The amount of Waymo rides that's going to start to happen here in the next 12 to 24 months while other folks are trying to get their product up to market, right? It's going to be ridiculous. And so they've got first mover advantage in a massive way, and just watch Waymo take off. So Google, the moral of the story is they have insanely great core businesses of Google search, of YouTube, right? Gemini is going to compete long-term with ChatGPT. Believe me, Google's not just going to let ChatGPT dominate for the next 10, 20 years. Like you'll see, in my opinion, Gemini slowly take more and more market share over the next several years. Just as Google did in the search. Google was not the first popular search engine. Heck no. It was Yahoo search. There was other platform. People using MSN and stuff like that. Ask Jeeves. Google search got bigger over time. I think that's going to happen with Gemini. And I've been messing around with Gemini product. It's really good. It's really impressive. So, yeah. Now, what else have I been buying? Well, I bought $31,000 worth of AMD stock. This is crazy. To see AMD trading under $100 is just crazy, man. Crazy. I think this is just a stock that people are going to be looking back at a few years and be like, how did we miss this one? How did we miss this one? I truly believe that. And it's wild, man. It's wild because there are not that many big tech companies that I look at and I say, wow, that one might have 5x or 10x potential, right? Even I look at Adobe or Google, some of those stocks, those are great money-making, easy stocks for me to buy that should be able to make easy money on over the next 5 years, right? But could I say they're going to 5x or 10x over the next 5 years? Probably not. I don't see Google 5xing or 10xing in the next 5 years, nor do I see that happening with Adobe. I think there'll be great returns. I think both those stocks will severely outperform the stock market. But are they that 5x or 10x opportunity? I'm not so sure about that. If you want to talk about a company that at least has a chance, a realistic chance to be that is already a big tech company, look no further than AMD. AMD is really a company, when you see where this company's revenues will be going over this next 5 years and their earnings per share, I think that's one of the very few big tech companies that you can look at and be like, dang, they might actually have a shot to 5x or 10x that stock over the next 5 years and what Lisa Su's going to do there. So, I think there's just not a lot of people respecting AMD right now. And it's going to be funny. What's interesting is once everybody catches on, it's going to be an absolute pile up to get into the stock. And just my question is that 3 months out, 6 months out, 12 months out, 18 months out? But there'll just be a pile up to get into that one. SoFi Technologies, I bought over $15,000 worth of SoFi Technologies, which is very exciting. Very exciting. Now, you guys know how I feel about SoFi. I truly believe they are one of the most attractive opportunities for becoming a massive financial institution over the next decade, right? Massive financial institution, one of the big dogs. Now, when it comes to SoFi, I've been talking to them for the longest time about how I want 5,000 shares in the public account. I want 5,000 shares. And I kept kind of pushing it off. I finally said, you know what, let's freaking do this. And I've got myself to the 5,000 shares. And so I did it finally. And now I feel good with where I'm at with SoFi. I feel good. I feel like I don't need to buy any more shares. Not to say I won't, but I don't feel like I need to. Because I own 3,700 shares for the longest time in the public account. And I always felt like, come on, man, I got to get to 5,000. I finally just said, screw this, man, I'm doing it. And if SoFi becomes a financial giant over this next decade, I think they're going to become, I'm going to look back and be like, oh my gosh, remember when I was buying SoFi shares at $10, $9, $8? It's just going to be crazy, right? So that's SoFi. Now, what about Patreon? So the Patreon portfolio, the smaller portfolio, right? I bought some stocks in this one. Some of them are similar, some of them are different. Now, keep in mind, if you ever want to join my Patreon, it's always linked in the description area down there. It's the second link, right underneath my private stock group and 1000X application. Right there, if you want to support my content, see the stocks I'm buying and selling each week, you go ahead and join my Patreon there, okay? Also, by the way, my Instagram and X is linked in the description area as well. So, Patreon. And by the way, I care so much about this portfolio. You might think I don't care about it because it has $33,000. I care so much about this portfolio. It's so fun to me. It's like back in the day, I used to play a game called Clash of Clans. I'm not sure if you guys ever heard of that game, but you build up this base to be this beast base, and that was cool. But then it became more time consuming and more difficult. And then it was fun to like start a new base. And so I love having the Patreon portfolio. It's a smaller amount of money, but man, I love it. It's fun. So what did I buy? Well, Wynn. Bought some Wynn Resorts. You know, it's just one that I understand all the geopolitical stuff going on right now. No one wants to own a travel company. Okay, whatever. Like, you know, I think they're going to be just fine over the next 10 years. And so Wynn looks extremely attractively priced. I picked up some shares. PayPal. I haven't heard me talking a lot about PayPal. There's actually an exciting announcement today in regards to PayPal's basically stable coin and using it on Coinbase, and some positive developments in regards to that. But PayPal, another just huge moneymaker, huge cash flow company. Alex Kriska seems like everything going in the right direction in regards to PayPal. So yeah, I really like PayPal. ELF bought $625, so a pretty big move in regards to that one. I've been adding to ELF aggressively. Bought some Amazon stock, $724 worth of Amazon stock. And that's crazy, almost the same exact amount of AMD, right? Because $724.63 of AMD, $724.64 of Amazon. Amazon's really attractively priced right now. I would have bought some Amazon in the public account. I just wanted to focus more on Adobe and Google, right? So this is what the Patreon portfolio is looking like now, right? This portfolio is doing tremendous. And just imagine for a moment when Nike and AMD go on a run. And maybe I'm wrong on AMD, maybe I'm wrong on Nike, maybe they never go on a run and just it's bad. I think I'm gonna be right in regards to both those stocks. And not only right, but like very, very right. As in like Nike's like triple the price in 3 years, and like AMD's like triple or 5x the price in 3 years, right? I think there's a decent probability of that. And so imagine when those stocks go on their run, imagine where this portfolio is at then. Because those two stocks are holding the portfolio back right now, right? And they're really the only two stocks that are holding the portfolio back, because the only other red position I have in the Patreon portfolio is Wynn, down 3%, down $97. Is literally nothing, right? So those two are holding the portfolio back. So imagine what the returns are going to go to when Nike and AMD go on a run. Like, oh my gosh, it's going to be insane. So that portfolio has been doing tremendous, and I could not be more proud of it. Now, listen. You guys have got to disregard all the crap that's coming out constantly right now. Every day you're hearing about Trump said this, China said this. No, they didn't have a meeting. Oh, they're having a meeting. Oh, they're not having a meeting. Oh, you can't control any of this. And people get too tied up into this, and they're choosing to not make investment decisions. They're choosing, I was showing AMD earlier today. Did you know AMD's already up well over 20% from the lows it hit just a couple weeks ago? I could show you a long list of stocks that are now 20, 30, 40, 50% up from the lows they hit just 2 weeks ago, 3 weeks ago. It happens quick. You get 20, 30, 40, 50% pops like that very, very quickly when the market starts to turn, even when things are still very uncertain. And so you got to stop like trying to make your investment decisions or holding yourself back because Trump said this one day and then China said this and then they said that. That's going to be what that's going to be, okay? You got to focus on actual companies, listen to conference calls, looking at earnings reports, running valuations on stocks, using 1000xstocks.com, use a projections tab, run your numbers on these companies. That's where you got to focus. Don't focus on all this stuff, all this other stuff, because you can't control that. That's completely uncontrollable. Whether Trump wants to do a 9,000% tariff on China tomorrow and China does a 50,000% tariff back, you can't control any of that. It's irrelevant. It's going to be what it's going to be. It'll work itself out over time. You just got to have faith that eventually it'll work out, and it will. But it's going to be what it's going to be, okay? And, if I look at my entire investing life, right, and building up this net worth I have now over this, last 16, 17 years, when I first started investing, it was under the end of the Bush era, right? Bush was about to be out of office. Then I invested under Obama first term, Obama second term, Trump first term, Biden first term, and now Trump second term, right? And all those individuals were different. Their policies were different. How they went about things were different. The geopolitical landscape at that particular time was different. The economy was different. The stock market was different. The biggest companies were different under those eras. At the end of the day, I just stay focused on putting my head down, making sure I'm putting in the work, researching these companies, investing, making money, and keeping it simple, right? Because I couldn't control what Bush was going to do, or Obama was going to do, or Trump was going to do, or Biden was going to do, or Trump's going to do. Like, that's going to be what that's going to be. And you just got to have faith. It's going to work itself out. It's going to be a drama show. Everybody's going to be talking about it. It's going to cause volatility in the market, massive volatility. But you can't control that. But what you can control when there's those massive periods of volatility, and you see the VIX go to 30, 40, 50. We had VIX a couple of weeks ago that was 50 plus, right? What you can control is buying the dip, is buying great assets at great prices. You can control that. The rest of it's out of your hands. Let that be what that's going to be. And in life, you got to control what you can control. The rest is whatever it is. You know, we can't control how fast the earth is spinning right now, or if we keep spinning the right way, or if we go into the sun. Like, we can't control that. That's out of our control. Same exact thing when it comes to politics crap. You know, the president of this country did this and whatever. Control what you can control, okay? Appreciate y'all joining me as always. If you're looking to control what you control on a much higher level and you want to apply to join my private stock group, get access to all my best course curriculums, start taking investing more serious than you've been taking it, pin comment down there, click on that, fill out a form, see if we can get you access to all that, get you up to a much higher level maybe next week, okay? All right, guys, much love and have a great day.